We got our panel coming up. Mark Friedler, I see you sitting right there. So Mark Friedler is the CEO of Gigex, and he's going to be moderating this panel. We've got Greg Carson, Managing Director of XBTO. Liam Robertson, CEO of Alphabit Fund, which you met earlier, who you met earlier when he did the one-on-one with Michael. And Anuj Karma, who's the CEO of Peak State. And Nithin, Eapen, Chief Investment Officer of Arcadia Crypto Networks. If you guys could all make it up to the stage, and looks like we're short one chair, so I'm going to have to pull it. You're going to stand? All right. Let's give them a big round of applause.
All right, guys. Bring it on. Okay, this is going to be the most exciting and important panel of the whole conference. I hope you guys are paying attention. You want to learn how to make money? So real quick, why don't we start from Liam's side? If you guys could just do a quick intro. We don't even need Liam's intro because everyone knows who he is, but he just...
Hi, Liam Alphabet.
Okay.
Okay. Hi, I'm Anuj from Peak State. We are an advisory firm helping ICOs where possible with fundraising. Thank you.
Nithin Eapen, Arcadia Crypto Ventures, investors and ICO advisors, only cryptos.
Oh, he's next. Oh, Greg Carson. I'm with XBTO, Blockhead Capital. We're a market maker for the primary pairs, proprietary hedge fund in New York, and internationally we do venture investing, and we have an index fund, and we have a mining operation. Pure crypto hedge fund since the beginning of 2015.
Awesome. And my name is Mark Friedler, CEO of Gigex. We're an ICO advisory and investment firm based out of the Bay Area. And two of our clients are here, Swarm Fund and Vertex. We advise 13 other companies in our portfolio. So the title of the panel is Equity versus Tokens. What are the markets looking for? And I think especially in 2018, everyone is like, gee, are the deal terms changing, at least in the United States? A lot of people are very concerned about utility tokens versus security tokens. So why don't we start with you, Liam? I mean, what does 2018 look like, and what are you guys doing? And is there anything you're not doing or doing differently than you did in 2017?
I mean, in terms of our way that we approach investing, nothing's changed. I mean, why would it? I mean, we have our own fundamental way of investing, and we've got to stick to that. In terms of tokens versus equity, I think tokens are still at this point in time a speculative investment in terms of capital appreciation. You're looking at something to go up. And there is, I think 99% of all tokens don't have any actual use case at the moment. Therefore, it's just speculation, right? With equity investing, you have rights to the company, and the company is accountable to you as a shareholder, and therefore, at this point and this juncture, we feel that we are picking we pick tokenized companies to invest in. And we think that tokenized company is good, and therefore we want to be part of it, and therefore we want equity as well. So they're accountable to us, as well as holding tokens where there is no accountability, and it's still a speculative investment, basically.
So from a 2017 perspective, most ICOs who started planning or executing their ICO last year, or even when they finished this year. I myself am involved with 8 companies, out of which 3 have finished or just finishing their ICOs. So the first 3 didn't give away any equity, and it's a lot to do with the market conditions. But almost everybody today is ready to offer equity, and most funds we're speaking to are asking for equity, unless it's a very small fund. Our experience in some of the funds in Asia is they're more interested in liquidity, who's going to be the market maker, is it going to be listed on a tier 1 exchange, because they are looking at flipping the coin and they're speculating. Some of them, I can't generalize for all, but most funds who have a long-term vision, they're looking for equity as well, apart from tokens.
As far as Arcadia is concerned, we believe in the long thesis. We are very long the whole crypto space. We're not specifically long one coin, so 80% of our investments are in liquid tokens. Now, we don't do any more equity investments. As an investor, we don't care about equity. We are concerned about how is the tokenomics, because many times equity, if we get equity also, we can, it comes to we have reached the points where our companies were worth 500 million, but they couldn't raise the next round, it went to zero. So realistically, it didn't matter. So what we are looking for is the tokens, at least if they are liquid, we don't mind investing in ICOs. We look at the founders. That's what we look over there. Now, when we are advising ICOs right now, because the tide has changed from 2017, we have made most of our ICOs like a security token with an option to convert to a utility token based on who the buyer is. And if some of the buyers or the investors are coming saying that they want an equity in the company, we tell the founders, it's up to you. Do you want their money? Well, give some equity, make them happy. So it's like a give and take, make it a compromise between all of you guys.
For us, we're a little bit new to myself, not to the venture game, but as a firm, we started after last summer doing venture investments. We've done a couple that are pure equity, and we prefer that because of governance. And because we're also, our primary thesis is in crypto finance plumbing. So we were a first investor in Libra Tax. We just finished a Series B with them, along with the IKEA family. We are investor in a couple exchanges. We're looking for companies that are helping the future of crypto financial securities, and custody is interesting to us, and different securities is. So we are looking for equity, but we have taken a couple of positions with tokens as well. Generally, my personal concern is with tokens is finding a balance with the governance and the accountability of the management team. We haven't really. I mean, now we're feeling the stress of the first of what happens when the market's not in your favor.
So what would you have done if Tezos had come along, or Ethereum had come along, or a lot of these things run by nonprofit foundations that don't have equity? Would you have not gotten into Ethereum? Or?
We didn't. Well, yeah, we didn't. Our firm has been long in those because those are pure cryptocurrencies. They're not utility entities. We're not investing in utility tokens. If it's a utility company, then very much looking at the equity side. We don't know how tokens will work yet. But that's just our thesis is more focused on the infrastructure of crypto finance. So that's kind of where we're focused.
And to add to the earlier point, one of the reasons why we're not very particular about equity is, in a private company, if we have less than 50%, it's not like I can force the board to do anything that I want. I can just fight with them. So that's why we just let it go. We are like, okay, anyway, like if they decide they're not going to give a dividend, I can't force them to give a dividend. So I'm like, okay, let's try to see. We're taking a big risk being in the crypto space. So I would prefer to see, can I get my 10x's or 100x's if it's possible? And if it's not, which 95% of our investments, we think they're going to go to zero. So I'm looking at my 5% or 1% if they can hit the 1000x, like we did it in Ethereum and Bitcoin and all. So that's what we are looking for.
Got my own.
Well, all I can add is, it depends a lot on the market position and the valuation and what the ICOs or companies they're planning to raise. And the option of offering equity is a good one in terms of, it gives more comfort to the venture capital or the family office or the private equity investor. Last year, there was a lot of momentum from retail token buyers and syndicates. So anyway, family offices were not investing or VCs were not investing. So equity was not in question. But right now, the retail token buyers or syndicates or even high net worth individuals, they're fading away in terms of the investment landscape.
With buying crypto and stuff, buying coins as in money is cool, because that's what it is, it's money, it's transmission of value. Buying utility tokens, there's no such thing as a utility token, that's bullshit. They're all security tokens until they provide a utility platform, which is always 2 or 3 years out. It's a security, they're raising money, right? With discounted incentives. It's a security, right? And then it could potentially develop into an ecosystem of it becoming a utility, right? So if in that environment you're buying a token which is meant to be utilities, but it's not, it's a security, pretending it's a utility, you want equity as well, in my opinion.
Yeah, I agree. It's better to, after talking to Liam today, I'm thinking maybe we will take equity going forward because I think it's a smart move, provided we can push for a good deal on the token side. See, we are small check givers when it comes to ICOs. We try to make sure that our ICOs are going to the market and building a big community. That's what we are looking for. We want to be involved in projects where we are not holding 1% or 5% of the tokens because most of the time that's valueless. You can say that it's worth millions, but you can't sell it. There's no liquidity.
Right. So just in general, what is your guys' outlook for the crypto market this year? Are you guys bullish? Are you bearish? Are you sitting on the sidelines? Do you think we've hit the bottom and things are about to turn around? Love your perspective. Greg, want to start us off?
I guess that's more of a question for our chief investment officer. Generally, we are market makers, so we're kind of we like volatility. We like we're not, but generally we've been a long-term bull. I think that you run in some, a couple of my friends, I sit on a couple of boards, and a couple of my friends in other hedge funds have brought up some interesting theories around the vacuum that you have because of the deflation or the decline of Ethereum after the ICOs. So you have all this money went into ICOs, the ICOs dropped, the Ethereum dropped, and then you have kind of like this negative sitting there. So they would predict that, and that's not us, they're predicting that it could go down to 3,500 or something like that before it'll go back up. But I think in the long term, if you look at the, we had some good speakers earlier mentioning, I don't think anyone would be in the room if we didn't have a bullish take on this. If it happens next month, it's probably not likely. If it happens in the next 24 months, it's great. You know, and I think if you have this kind of anxiousness, what December did is it pulled away anyone that had this anxiousness on the market, it kind of kicked them out.
Right. Well, so that's a great point because there was all this FOMO Q4 of last year. You know, in September, Bitcoin was at $5,000, and people were buying up to 10. They were buyers all the way up to 20,000. As Michael Turpin keeps saying, "Hey, this is on sale. There's a huge sale going on right now. Why are people nervous? I mean, why don't they see this as, wow, this is a buying opportunity. I'm going to load up on all the coins I want." Where are the buyers right now?
It's a good question. It's simple supply and demand economics on securities. I mean,
I would say a lot of it is this market psychology, okay? Yeah. So when things are going up, everybody's buying, and it pushes things up further. And realistically, people should be buying if they think it's good when it's falling, but they don't because now they are all scared. They're thinking it's going to zero and they stop buying. So real value investors that I've seen take that contrarian position that when it's going down too much, they buy. See, I wanted Bitcoin and the whole market cap to go up, but I don't want it to go up so fast because I know those guys who bought at the 10,000 and the 20,000, they got burned. And now they are always, I'm sure they're saying, oh, this is a scam. So if it's going up slower, I can also, because we get in every month, every day, we are trying to buy a little by little. We have a very long thesis. It goes up too fast, you know, it's not good for the whole market as such.
Yeah, I mean, we've been buying shitcoins like crazy in the last couple of months. Like they're on the way down's the way to buy it. We've been buying loads of lower cap alternative cryptos. The market's it's still very liquid. Bitcoin's very liquid. So when you see this influx of euphoria and bullishness, it overly impacts the price. Like you see I remember it spent 2 weeks. Like it went from 6 to 7 to 8 to 9 in a month last year. Like $1,000 jumps in a couple of days, and that's just because. There's no sell side. There's no sell side. There's no one selling Bitcoin. There's no ability to buy the huge chunks of Bitcoin without impacting the price. And then you've seen this bleed off since December, which has been low volume, which doesn't worry me at all. And in the general scheme of things, it's an 82% correction, which is the same as the 2013 correction, which is the same as the 2014 correction, same as the 2012 one. It's exactly the same, bang, bang, bang. And it's just bigger and bigger. At the end of the day, they're going to have the next wave up, the fifth wave, which is going to be 100K down to 20K. right? And I think to be on the right side of that trade, we all pack up and just bugger off. We'll
So
Liam,
Liam, you guys in Alphabet have what, like 300, 400, 500 under management? So what do you think happened? Because December was the peak, then all the professionals came in, the CBOE futures lit up. It would appear as if the professionals have gotten into the market, but the market's turned bearish. Are the professionals really in yet?
There is no professionals in the market.
Yeah, I think
there's bullshit. No professionals are in the market at all. No institutions. CBOE volume is pathetic. The futures market isn't even impacting. This is basically what I would suggest is the huge whales in the crypto sector offloading to noobs, which is what happened from December. All the mining, like, let's get rid of this shit, man. We've done 1,000, 10,000x. Let's cash some fiat out. There's no institution. This year, with an ETF or some institution not from the crypto space gets approval from the SEC to do their thing, then you'll see the institutional money come in, right? There's no, like, the hedge funds don't have a clue. They still don't even know what blockchain is. And the idea of them being in the space is not accurate as yet. But we're getting there, I think.
I can add to that a little bit. One of the things the thing that's a barrier for the institutionals is custody, is accounting, and it's not that they're worried about the asset class. They actually all kind of want to come into it. And actually, one of our investments is Libra. You can see on Crunchbase, we invested in Libra. And they are going live this month with, I think, 5 to 10 fund administrators. It's in their press release. Fund administrators each have 10 to 20 hedge funds. So, and Libra enables the top 10 accounting firms to actually audit the financials of a crypto firm. I know of one that's going to have an audited financial by summer. That basically is going to be a total change the game for institutionals.
I think custodian of assets.
Custodian
of assets, like the ability. I mean, when I set Alphabet up, I was like, we're talking about custodianship of assets, and the administration firm didn't understand a 2 or 3 multi-sig wallet, right? It's like, this is more secure than a bank with money in a bank, but they don't get that. So we need a custodian, a traditional custodian, for the institutions to feel comfortable coming into the space. They don't understand we have more secure kind of shit going on, so we need to do it their way and have a custodian with shit holding it in the bank, and then they'll do the trades. It's mental.
And there's some good technologies coming down the road. I mean, there's real professional custodians that are adding technology that have really interesting things. We're looking at those deals now. Those are the kinds of stuff that we look for.
The good news is that, the largest FX funds, they're looking at crypto. They want to come in crypto, the funds which manage FX on behalf of pension funds, etc. The only reason they can't come in is that they're not been able to get the right governance and, as you said, custodian services in place. There's all reasons to be bullish, because when these big investors come in, we'll see a big impact on the market.
So Anuj, you guys have a kind of different strategy, right? You're more advisors, so you're doing part of your work. So in essence, you're buying tokens through your work. Is that right? So our advisory service is mainly aimed at ICOs. And these are companies who are raising funds, and we're speaking to funds alongside the founders of the ICOs. But additionally, we do have some contracts with companies who are asked us to do like a research or a due diligence project about investing into crypto, and that's where we work with some of the largest FX funds on that project. Very good. So I'd be interested to hear like a deal you guys are looking at now, and why you're doing it. You don't have to name the actual company if you don't want, but kind of like what the dynamics are, why you're excited about it. Is it a pure equity deal? Is it an equity token deal? Is it, some kind of hybrid crazy shit?
We don't do tokens.
Okay, well, we're looking at Uphold. I think that's really important for the ecosystem. Basically what Uphold is a proxy token where you can have all your money, right, your Bitcoin and your Ethereum, you stick it in a custodian, right, and then they issue proxy tokens, and you can trade the proxy tokens. So it doesn't matter if you lose your proxy tokens or whatever, because you still got your shit in the custodian. So that's launching now. That's basically what this market's looking for, and we're investing heavily in that one, yeah.
And when you're investing, are you investing purely in tokens, or are you getting an equity stake in the business?
They're too arrogant to give us equity, Paul. They want to keep it all for themselves. But I'm still badgering them over it. But we're getting tokens for the time being. I might get some equity out of them.
But like when Alphabet shows up, don't you just tell them, hey, piss off, we're Alphabet, we want some equity?
Yeah, but it depends who chases who. I was chasing them. She was the girl, I was chasing that girl. So it was the other way around.
A lot of our stuff is in protocols, but besides that, so we kind of believe right now what is working is remittances and exchanges. So we invest in that. Now, when it comes to exchanges, so an example is institutional, an exchange catering to institutionals, whereas like the big hedge funds or the big banks. So we came across the biggest FX liquidity provider. They do $10 billion worth of FX a day. And we worked with them to say, because their clients were also asking them, can we trade cryptos on your platform? So we joined with them saying that bring cryptos on, we'll help you get there, because we want to invest in something like that. At that point, we convinced them to get into the space because they had the technology and they are in every institutional. Like if somebody comes to me saying that I'll build a great exchange or a liquidity platform, my question is, how are you going to get inside JP Morgan or SAC? Because without that, the platform means nothing. So that was one of the reasons that we went into Edgewater. Like the other one is a protocol, Digital Bits, that's to tokenize any assets. We were in the poker space when we found out that Virtue.poker could totally eradicate the middleman and have our cash stored in smart contracts. We're truly looking for decentralized projects or projects like an exchange, which we know will work today. Many of the other apps, we're not into it yet because we think it's not ready, but we do support them in every other possible way.
We are looking at, like I said, we're looking for the plumbing. I'm looking at a blockchain forensics company right now for helping us with searching out tainted coin and protecting against KYC. I'm looking at a very sophisticated custody that can deal with a large bank's custody. And I'm actively looking at alternative securities. I think that the last panel was quite interesting. Anything that's really pushing towards real security or your real securitization. I mean, Thailand just announced they're going to securitize their bond market this morning. I think if you saw the news. I mean, you have a lot of really, in the US, they just, we read an article, the House Representative are considering the US for crypto currency as like legal tender. I mean, you have a lot of really good news. Companies that will benefit from the formalization of the market is stuff that we want to be in.
Right. So
we'll look it up all of this guy.
So this morning, the Prime Minister of Malta was right over here, and he said that Malta has announced a whole bunch of new regulations to basically bring clarity and stability to crypto regulation here in the EU. Simon earlier today was, from Bank to the Future said America is the worst place ever to do crypto, and so. Obviously, there's going to be changes in the regulatory environment over the next few months. Assuming the U.S. gets its shit together in some way, shape, or form, does that matter? Does it not matter? Or is the market just moved on and everyone's just written off the U.S. and it's all going to be focused offshore?
I think that we all want crypto to be successful. It's the first time in history that you have this much asset sitting outside of a jurisdiction and outside of a currency. It's an amazing feat for the world. No doubt. But the U.S. is a juggernaut of capital. And the amount of money, I mean, there was $1 billion last year put into venture capital, pure venture capital, not ICOs last year. That money is controlled by people with a lot of influence in the government. All the hedge funds are about to step in. There was an announcement, Soros made his announcement. Several of the other guys that we know on the street are actively evaluating crypto. As soon as those guys go in, you can bet that all the banks and all the regulators are going to get on board in some way that's beneficial for all of us. So, I mean, when Sequoia moves a finger and Andreessen moves a finger, you don't think that they have contacts all through the government. I mean, I've seen stuff move in my deals where someone, a company has a regulatory hiccup and then 6 months later it's gone.
So we take a very big different stand over there, okay? We invest in a lot of tokens like Mimblewimble. We don't know who the founder is. We invest in those tokens. We are hoping like Bitcoin, we send them money and they might send us back something. Because we're a private fund, we can do that. We're not raising outside money. We We are true believers in decentralization. So recently there were two big races, like the hash graphs and all. So in I came from a very retail background, investing $500. So I'm in those chat channels, which we are 5,000, 6,000 people. So among ourselves, we always talk, we are not going to invest in those kind of deals. We are like, okay, if the Sequoias are taking the first discounted stuff and planning to dump it on us, we are going to take a stance that we are not going to buy it. Now, it is a principled stand. There might be some others still buying it. It's okay with us. We will work on deals that, as a retailer, and that's why we send small checks, because that's enough to make a great return for us.
So if you think about what Liam said earlier, where he thinks all utility tokens are bullshit, but...
When they start, yeah.
When they start, okay. But 99% of the crypto liquidity is on exchanges that trade utility tokens. Right now, there's virtually no security token exchanges live and lit and liquid right now. So what does that mean for these kind of stupid valuation things, like you were talking about Hashgraph, or my favorite, Telegram?
Telegram,
right?
Definitely. No, we don't buy those. Yeah, we don't buy those. Like, there's no way, like, the Hashgraph deal was something like 4% for a valuation of something like 3 billion or something. So for me to make money on that, they have to be valued and there's a 2-year holding period, and they have to be valued at what? From 4 billion, they have to go to at least 12 billion for us to get 3x. Well, by that time, I'll just hold Bitcoin. It's way more easier for me for something that's unproven, and it's not truly decentralized anyway. They're saying the DAGs and all these things. Realistically, it's not working. If it's something that's not working, I want to get it at a very low valuation to see if there is any upside. Otherwise, it doesn't even matter to me.
Everybody wanted it in Segway and Webvan as well, so...
Okay, guys, so it's been an amazing last year. I'd love to hear from each one of you, like a lesson learned, good or bad or indifferent, that you've kind of taken away in the last year and what's impacting what you're doing now.
Don't disregard investments purely out of principle. What
does that mean?
There's been a couple of tokens which I've just done. The people who run it are wankers, the crooks. And they've got their money from this, and this. I'm not going to invest it because I don't believe them. And then they go and do a 1000x. I like Ripple, things like that.
I think the main lesson I've learned is that the fundamentals of business have not changed. So, I've been working in tech since 1996. So, there have been ups and downs, and I just feel this industry is going to mature. So, somewhere in the euphoria last year, I thought, it's not going to be, then it's come back to reality now.
So, by 2016, we stopped trading. That was one big lesson learned for us. There was no way we figured out by trading we could beat by holding this thing, because if we believed in it. So we believed in it, so we stopped trading. We don't sell coins. That's the first thing. Second thing that I learned is this is a whole different beast. Don't try to apply the principles of equity, what happens in a stock, to this thing, because this is not a stock. It's something very different. Like in the IPO market, let's say if the markets were tanking, nobody could raise a penny. Here we have a crypto winter, and 9.5 billion is raised in tokens. I cannot imagine that in a Wall Street world. It's unfathomable.
Yeah, I guess for us, it's, to keep our eye on the ball and focus on people. For us, it's all about, it's the same thing we've been saying in venture capital for 10, 20 years, which is that people are like 95% of the equation. You can have a cool technology, a great white paper. We've seen, I don't want to mention some of the names of some of the big ICOs that have come out where just the management is a disaster. The community is great, the technology is good, the white paper was great, but the management is a disaster. It's the same we've had in venture capital for ages. So it's.
But we're talking about DAOs, so we don't need any more management. It's all going to be taken care of by a machine. So one quick thing. I'm just going to ask you guys, like, for a sentence, what's next prediction over the next year to 18 months. Then we'll take a couple questions if we have a moment or two. Go ahead.
18 months.
Yeah, 12 to 18 months. One prediction. What's next?
What are we predicting exactly? Just whatever price of Bitcoin.
Whatever you like.
Whatever. I think that the next 18 months is going to be the next 6 months is the 6 months of regulatory notice, and then after that is the time for infrastructure launches. And that's where you're going to see another surge in Bitcoin and Ethereum as people start to get comfortable, especially with the hedge funds entering the market.
I'm expecting more regulation, and I'm expecting the ingenious minds to come up with something that will beat the regulations.
I'm expecting much more capital flow into the industry. Probably in ICOs, there is close to about 9 billion. I would probably look at maybe 5 or 6x that amount in the next couple of years.
I think in the next 18 months, we're all going to be locked up for money laundering and fraud.
All right, that's awesome. Thank you. Stuart, do we have any time for questions? Or okay, does anyone out there have a question for this amazing man? Yes, sir, over there in the corner. Here.
Hello, my name is Vladimir. I represent a company called Arloyd Automation. The question is, what kind of project categories do you invest in? Like infrastructure projects, gaming, energy, or something like this?
We like gaming because we see a very obvious use case for crypto and gaming. We like sex and crypto, that works. Things with obvious utility and things which can be used in a closed loop system, like Wax, like Intimate, and things which, those are real utility tokens, I suppose.
For us, it's that and gambling, by the way.
Oh, gambling, gaming, sex.
Sex, gambling, and things like that are the ones that work. They get it. Those communities understand the regulations, borders. It's much easier. The gaming guys are the best as of right now.
I can see the headline tomorrow: the future of crypto, sex, gaming, and gambling.
It's how the internet, and that's how VHS won. It's for us, it's all infrastructure thesis, basically securities infrastructure, next generation tokenization, that kind of stuff. All the stuff related to the future of Wall Street.
Okay, is that it? All right, thank you very much.
Nicely done. All right, nicely done, guys. So we have our next panel. We've got our moderator sitting up front here, Enzo Villani, Managing Director at Transform Group. Why don't you come on up? And we've got our panelists. I see them in the room here. So Dennis O'Neill, founder and CEO of O'Neill Capital Advisors. Alex McDougall, General Partner, Bicameral Ventures. And Jay Oberai, founder and president of Synergy. Family offices, are they a factor yet? That's the topic of the panel. So Enzo, why don't you take it away? Let's give these guys a big round of applause. How you doing? Good to see you.
Great, thanks, guys. How are you? Alex. So, family offices. I did see actually today that PitchBook has stated that the family offices have jumped by about 49% in investing directly into Reg D offerings, venture offerings, and angel investing, and deals in general. So they're not using hedge funds at asset allocation all the time. They're getting more and more savvy in investing directly. What I'd like to do is to, which I think is a really telltale, I'm not sure about the crypto industry yet. I'm still kind of like on the fence there. But what I think the way that we should start this panel is we should just kind of go through your backgrounds and then maybe give us your first thought on whether you believe that family offices are engaging, what are you seeing, or are they getting involved?
Sure. So my name's Alex McDougall. I run a venture capital fund called Bicameral Ventures, which invests in kind of the early stage equity positions of projects that are building back on top of the Aon platform. So family offices are super interesting because there's such a diverse group of offices. There's VCs, there's PEs, there's hedge funds, there's capital preservation funds. So it's almost hard to lump them all in together. I kind of think about two general things that differentiate family offices. One is that they have a shifting risk tolerance over time as generations and things change. And also that they have a heightened awareness for the reputational side of things. So they're definitely engaging in crypto, and I feel like the whole institutional thesis in general, November of last year, everybody woke up, but then when you're an institutional investor, you have to set a committee, you have to ask for allocation, you have to do all of those things, right? So we're kind of getting to that stage. So I think they're definitely engaging, and I think they're sort of reaching the life cycle of it, but it's going to be a pick and choose of what family offices make sense for this and where they invest, whether it's through hedge funds or directly. That was really interesting about the direct investment that's coming.
Great.
Hello, Dennis O'Neill, O'Neill Capital Advisors. My background is 25 years of investment banking. Raised a couple of $1 billion in early stage capital. Primarily focused right now on family offices and institutional investments into ICOs and cryptocurrencies. And, obviously, as you were saying, it's, family offices are like 31 flavors. Every one of them are completely different. They all have their different areas of expertise or areas that they want to focus on. For them, probably the biggest issue that they have today is the regulatory issues and custodian issues. I think that if you look at the U.S. market, I think that is probably the worst market right now for family offices, only because that the well's been a little bit poisoned by the SEC and some of the news coming out of there. But where we're seeing significant activity in the family office community is out of places like Asia, Singapore, Hong Kong, even Malaysia and Indonesia, Vietnam, and Switzerland and Monaco. So I think that as this market evolves, as it matures, as the regulatory risks go down significantly because we have settled law, that it will see a significant increase in activity by the family offices.
Great, thanks. Jay?
My name is Jay Oberai. I run a family office called Synergy Asset Management out of Geneva, Switzerland. We run $2.5 billion, 150 clients, and I disagree with both of them. All family offices are exactly the same. There is no difference between any of these family offices. They do the same thing. They do two things. Basically, a family office is for private clients. It's not institutional. So when they take in money, what they need in exchange is trust. Clients give them trust and give them money. So the problem with them is that when they invest in something, a product, what they want in return is trust also. So most of the time they spend just covering their ass. They don't want to lose the clients, so they don't want to take any risk, so they will not go into invest long-term, high-risk investments. That's the business model. It's just simple. Charge a management fee, and that's all you get. So as far as I'm concerned, for the last 200 years, family offices have always been at the bottom of the food chain. They will invest last when it comes to technology, innovation, new things. They come in right at the end because they don't want to take any risk. However, I think this time is very different. Not because they're any different, the animal hasn't changed. What's changed is that the people above them in the food chain, whether it's institutional clients, governments, hedge funds, are scared of this new world that we're getting into. They've got to get rid of the old fiat money and go into new things. And so, therefore, there's no one left at the top. Everyone else is waiting. So, and because what you guys have done in terms of blockchain all around the world, the average person is talking more about this new technology and blockchain than the institutionals are. So therefore, these average people are talking to family owners, and the family owners are coming to our office and saying, why the hell are you not in there? This thing has gone from 1,000 to 20,000, you idiot, get in there. So when they say that to us, we have no choice but to call up people like yourselves and say, hey guys, you have some ideas? Is there something that we can invest because our client wants it? So therefore, we've de-risked ourselves completely as family offices. The problem is that there isn't much investment from family offices currently into blockchain businesses and technologies. The reason for that is because you guys have not been able to speak to the family offices. There is a demand from family offices. They're dying for it. But because you don't know how to talk to them, you haven't been able to get the investment. It's like what I say about the hottest girl in a bar. No one really wants to talk to her. She's actually the easiest girl to get. All you have to do is like unbutton your shirt and take out your Ferrari key and go up to her. And you'll know if she likes you or not. Either she likes your hairy chest or she likes the money that you represent. But go to them. Go to these family offices and build those bridges and those links because the money is there.
Yeah, I need to respond to that. I mean, I don't know what family offices that you're talking to, but all the family offices that I speak to are very, very diverse. Typically, the family offices have made a significant amount of money in a certain sector of the market. It could be pharmaceuticals, it could be oil and gas. The only thing that they have in common that I've seen so far is that they all own real estate. And besides that, they are very, very specialized in where that they spend money. Now, it's not that they won't diversify it into other classes, but I will give you this, is that anytime that they see an asset class that is moving up significantly, most of them will sniff around, kick the tires, but after they miss a couple of deals, then they'll start writing checks. And we're starting to see these guys engage now because that they're seeing that they've missed some opportunities out there.
Great. So what's your FOMO? It's FOMO is one thing, right? Now, they are still asset allocating into hedge funds and venture funds with their 10-year holds or 5-year holds and all that stuff. But it sounds like they're also doing their own thing, and I guess the younger generations. I think someone actually pointed out here, the younger they're giving a little bit of the capital to someone younger in the family who wants to participate and maybe be one of the key investors of the family office on a single family office structure. You're more of a multi-family office structure, which is actually like an asset allocation. Really, it's a diversification strategy. So it depends on what type of strategy they're after. He's more of the banking guy. He's more of the venture guy. So I think you're all right. What do you think is the one issue that's holding them back from investing in crypto now?
It's kind of the other point that I mentioned at the start, the reputation side, and I think that was touched on as well. It's hard. I mean, it's one thing to go out when you're out in your social circle and say, I'm investing in Bitcoin. Because, okay, well, why are you investing in Bitcoin? It's very hard to understand or to actually explain kind of the investment thesis of it as a regular person.
Well, because it's going up 1,000%.
Exactly. And so that's an easy answer to do it, and that's one way to do it. But especially when you get into some of these secondary coins and tertiary coins and the shit coins, that it becomes very hard to kind of stake your reputation when it comes to money discussions. And because the family offices are so heavily aligned on the reputation side, so what I think is kind of key is almost reversing it on its head and starting with the business models and kind of the use cases of it. And there's not really that many good ones right now on the decentralized app side. We're still kind of at the protocol layer. Yep. So where we're trying to invest, and sorry to move this back to my fund, is kind of the layer 2 protocol and then the first showcase dApp that builds on top of it. So give somebody a 2-sentence soundbite of what they're investing in that doesn't use the word blockchain, and teach them the bare minimum of what they need to know to understand why it's different than a centralized solution.
So they want to get involved, but you're going about it in a way that's less, hey, this is the hot market. You're going in and actually trying to explain to them what blockchain is.
Less even about what it is and more what's the end use of it and why is it cool to me. And that's kind of the model for adoption. It's you need to know the bare minimum of the next level below to explain the cool so what at the top. And I think that if you give people talking points, that'll make it easier for family offices to get involved.
So isn't it custody issues? I'm sorry, go ahead, please.
No, I was just going to say that you're right. It's absolutely true. You get Sheikh Mohammed's family office to invest in something, they all want to invest. Yeah. So it's a question of that trust and getting some of these family offices to invest. We're in fact looking at we're actually buying into a event management company in London that focuses only on family offices and markets to them all over Europe. They have 3,000 family offices that they work with and market funds. These are institutional Fidelities and others that want to market into Europe and Middle East. So we're buying into that company, and then we will go and take ICOs to those family offices. So being a family office ourselves, and we say we're investing in a couple of ICOs, then all the other family offices will sort of piggyback off that, saying, well, these guys are getting in, why don't we look at it too?
Okay. Yeah, I mean, a couple of the issues that I see, I mean, especially in the crypto space, is that number one is that I'm seeing a reluctance in the family offices wanting to lead the deal. But if you have a family office that'll lead a deal, or if an institution of a significant name or at least reputation, it's easy to get them to line up behind that. The second part of it is that they are relationship driven, and they really, really believe that they want a relationship with the management team. They want to be able to believe in the management team, and they want a management team with a track record of success and impeccable reputation, because obviously because of the reputational risk that they're concerned about embarrassing themselves or being part of something unseemly. And I think that the last piece of this is that because that they really don't understand, or they haven't evolved enough to really understand the dynamics of the tokens, that they're still looking at it as a private equity or venture capital investment. So, management team, stage of development. I'm not seeing any of the family offices that I know that are willing to do these seed rounds based upon an idea and a white paper. They basically want to see a great management team. They want to see, something that's developed at least as an MVP. And then third is that they'd like to see that they've raised some capital on their own so that they're not the only money in the game, typically, north of $1 million, so that they've at least had some cash and they can see what they've been able to execute as a management team utilizing that capital.
So the next question really is about what are the size of the checks if they are investing? Are they investing with fiat? Or are they investing with tokens? Are they what are they doing to actually invest? And how are they handling their custody and their wallet issues?
Sorry, what's a token? No, I think they're mostly, it's all fiat money at this point. So, and on the averages, they will never go more than 1% of a portfolio in total. So any one issue, I see as if they do invest in anything, it'll be at very, very small amounts.
Is that like $1 million, or is that like 250,000?
I mean, what I'm saying is that typically if they have minimums for private equity or venture capital at 5 or 10 or $20 million, they're doing probably 10% of that, or maybe 20% of that. Sometimes they do it holding their nose because they believe they have
with
to be
fiat.
But they believe that they can't miss out in the space, and the risk, the opportunity risk, even though that everything doesn't make sense to them or they don't really feel comfortable with it, that they'd rather have at least some money deployed in the space than to possibly miss something big.
It's pretty simple. I just want to. If you've got 100% of client's portfolio, out of that 100%, maximum 20 to 30% will ever go into alternatives. Alternatives includes everything that's not just pure equities, bonds, and cash. So out of that 20, 30%, they will never put more than 2%, 3% of that into cryptos. Never means the next 12 months.
So from your standpoint as a fund. So from your standpoint as a fund, though, are you like acting as a buffer for them? Are you trying to say, invest in my fund and I'll watch out and I'll do the due diligence?
So definitely, and we're targeting some family offices for our next round of raising probably later this year. But for that exact reason as well, because our fund does focus on kind of the end business model, but to give them exposure to something they can understand and also give that buffer layer. But I was actually having another thought as well, that there's been a couple conversations that I've had about the challenges of exiting positions and whether that might make sense for that to be an area for family offices to play, to take kind of strategic exits from other early investors. So almost like a later stage PE model where you take something that's kind of been vetted by a trusted partner or a trusted capital firm that has already kind of done the diligence and looking to exit because it no longer fits their part of the value chain. So that might be something to explore.
Yeah, I mean, the one thing I realize is that they don't take, family offices don't take deals on cold calls or people that they don't know. I mean, every deal's got to be brought to them by a trusted advisor. I mean, everything's reputational, everything's based upon a relationship, and I haven't seen any family offices ever do a deal where that they didn't have a trusted advisor or somebody that they had a relationship with as part of the deal.
So so for the folks here who are looking for investors, for for token buyers, how should they get engaged with family offices, or what's the best approach?
I think the solution would be Michael Turpin. Yeah, I think Michael Turpin is the solution. He needs to build the next Fidelity for blockchain. We need to create an organization which filters, looks at, monitors, watches, researches, and for family offices, and responsible for family offices. And if any of you guys want to build that with us, we would be really willing to do it. We want to do it. So we're talking about that in case. I think that's required.
Well, so I come from the actual institutional trading and targeting and actually IR world. So the investor relations, like we have databases that we've built because you can see via 13F filings that this hedge fund, they only invest in this, this, and this, and this pension fund can only asset allocate this much into this type of stock. The problem with the family offices is that it's a black box. So I do think that they're much more picky because you don't know really, like they might like the color of the logo. I mean, I really don't know what they drive themselves on as far as their investment thesis because they only have one. So so if you meet a family office, like, don't you want them pre-vetted? Like the token match, which is one of our events, that seems to really help because we pre-vet them. You're walking into a deal, you're walking into a boardroom, you're going to be there the whole day, and you're going to listen to 21 ICO pitches, and they're pre-vetted, and there's research behind them. There's a tear sheet, here's some information. If they show up to 2 and they don't write a check, that means that they've seen 42 ICOs and they don't invest in any of them. That's ridiculous. That's just a waste of time. So, how do these guys engage with these family offices and try to curate and vet which ones are going to actually write checks?
Sure. I mean, I think it's all about the trusted advisors, the people like Michael and myself and other people that if you've developed relationships with family offices to where that they take you at very, very seriously, very, very credibly, to where that you bring them opportunities, you get a feel for the areas of most interest with them. That's the bridge that you get into. But I mean, at the end of the day, you're right. I mean, they are very, very picky, and it's. A lot of it, too, is that they want to make sure they feel very comfortable with the management team. I mean, that's first and foremost.
Well, and that's the other issue. I was in a company as a CEO, and one family office kind of took over, and basically he was a very activist investor, and he didn't know what he was doing. So I basically was like, you don't know what you're doing, so why do you keep on writing checks? One, and it came down to a point where I said to myself, I was like, I can never change this person's idea of what they think is right because they just think that they're smarter, even though they were just a real estate investor. That's the way they made their money. I'm like, you've never been in fintech, but you think you're a fintech investor. So how do you deal with the fact of, are they more active investors? Are they passive investors? Do you want them in the ICO? Do you not want them in the ICO? What are we looking at here?
Yeah, then you go to I think the family office investor is the best investor you could ever have. Only if he's European. If he's from Asia, he's going to flip. But the European family offices keep their money a long, long time, and this industry needs those kind of investors. Buy and hold, and they will do it. They will look at, and that's why what you're saying is right. They will look at the management because they want to hold long term, right? They're not sophisticated. They're not difficult to get to. Family offices are not difficult to sell to pitch to, because they're really not sophisticated. They're looking at the human element more than anything else. I would, as a family office, I would rather buy a BlackRock fund and lose money than buy ICO and make a little bit, because I can't explain the ICO to a client, but I can justify BlackRock. It's not my fault, it's BlackRock. So we need to do that. We need to create that BlackRock identity within this industry.
And sorry, this may be a follow-up question then, I guess. Essentially, yeah. Well, sure, let's go. The BlackRock of crypto by Cameral Ventures, stated, built on Aeon. Let's go. No, so I'm just kind of curious where where all this direct investing is coming from. Then, if there, as we've all kind of stated, there's this big reputational angle that it's very hard to justify getting into these projects, and we haven't really seen the kind of easily understood use cases that make sense. Then, so I am kind of curious as to where the direct investing is coming or is going. Does anybody have a view on that?
No, I mean, I think just the opposite. The family offices that I know that, I mean, they're looking at long term, and that's the reason why the reputation is at risk. I mean, they have so much money, they can't be, as they tell me, I mean, they can't manage a bag of crumbs. I mean, they like to put slices of money to work for long term, and the reason why that they're literally the best investor you can possibly ever imagine is that because they're in long term, they will leverage every relationship in their network to help the company in every way possible. So, there is value add on value add on value add that they bring to the table. Obviously, it increases their ROI, but at the same time, it increases the success of the company significantly because they do have vast connections. I mean, everywhere from business-wise to politically and otherwise, and it makes them significantly more valuable.
So it sounds like club deals are really popular there. It also sounds like because if you have a founder entrepreneur, that person in itself could be an advisor or sit on the board, which also lends a lot of gravitas and maybe even some actual credibility to a project which you couldn't get prior. And it's not crypto. Like it's a non-crypto business expert versus a crypto business expert. So are you seeing? Are they sitting on the boards? Are they getting more? Are they like putting their face on their investments?
They should be.
Yeah, I mean, I'm not seeing a lot of. I mean, they're very, very finicky on what boards that they sit on because of the reputational risk. But if they do sit on a board, that means that they've written a sizable check and they're definitely leaning into the deal significantly.
So from the standpoint, how much capital have you seen in the last 6 months go into crypto from family offices from your experience?
0. No, I think in Switzerland or in Europe it's very, very small. Obviously, US is a bit more, and Asia is the number one. So we're seeing quite a few family offices in Hong Kong and Singapore, pushed by their clients, by the way, and they're more trading oriented, so that's why. But otherwise, when institutional money comes in, which is what everyone wants and is waiting for, I think family offices will come in a big way. They're major investors in private equity funds around the world, so there's no reason why they would not invest in this institution, especially because we're able to give them much more liquidity, or we will be able to give them more liquidity as the exchanges improve. So exit will be easier.
I mean, a lot of it. I mean, the major pushback right now is regulatory risk, and that's the one thing that they. The worst thing they could do is invest in a deal and have it, end up on the front pages is that some scam or that the SEC unraveled the deal or something like that. But yeah, we're seeing, tens of millions of dollars go into deals, not all directly through our network, but I mean, through the deals that I'm involved in. When they would typically do 5, 10, or 15, or $20 million, they're probably doing 20% of that into the deal. I mean, sometimes I say, I mean, they do it holding their nose because they're not used to not having
a convertible note structure into a token, or are they doing?
Yeah, they're just going into the tokens, but it's because there's no shareholder rights. And they really don't know about corporate governance. I mean, there's really no corporate governance. I mean, it's management, and they really want to make sure that the management team has reputational risk or at least a track record of success, so that it's not going to that there is something to point to as far as that you can comfort that these people have been successful and executed in the past, opposed to just writing a check to some 19-year-old kid.
Jose, this is where the quadratic voting comes in. We can solve the whole family office problem. I wanted to flip that around as well. And one thing that I've seen in Toronto and talked to some of the local family offices there is people who have made a ton of money in 2017 in crypto are starting to put capital into family offices that's been generated through crypto. And that creates a really interesting dynamic where you're pushing from the inside, but you also don't want to just take the money that you just earned from a crazy risky asset class and redeploy it back into that asset class. So it's kind of, you get the sophistication, but you still kind of have challenges on the risk side. And maybe it's sort of you're really diversifying, and maybe you're just putting a bit in crypto and making somebody else do the work and all of that aspect to it. But I think there is a lot more flow of funds that some people do look at this as a really one-time hit that they've just made a ton of money, and let's cash out enough to send our kids to college and live forever, and then we can go play with the rest. So I think that's an interesting inflow as well.
Great. So you know what? I see some folks here who are definitely doing ICOs, and I'd like to open it up to see if they have any questions for people who are dealing with family offices all the time. I think it's a good idea too, because I see a few folks, and if they do have any questions for them, or if they want to speak to them afterwards, they're more than welcome.
If you have a question, just raise your hand and I will bring the microphone around. Any questions?
Okay,
Wow.
So I think everyone's done here. Thanks a lot, guys. Thank everyone.
All right, great job.